I think we will now start the webinar. Chloe, it's a pleasure to see you today. Thank you very much indeed for joining.
Thanks, Grant. Pleasure to be here.
Great, really good to see you and looking forward to the webinar. So yeah, thank you everyone for attending today. It's an absolute delight to be on this webinar with our German investment manager, Chloe, who has been bringing some excellent projects to IP Global, of which we will be showcasing some of those today, and give some real good context to the German property market, which we've been investing in for many years and is a fantastic market to invest in, strong and stable in what is obviously a very uncertain world. So it dovetails very, very well with the world we live in right now. So if we can just go into the first slide, please, Louise. Okay, so why Germany? We're going to discuss the benefits and the merits of Germany and why we see it as an excellent property market to invest in. We're going to cover the main cities of Berlin and Leipzig and showcase our projects, which I will be touching on. And those specific opportunities for investment in those cities where we currently have investment opportunities. So next slide, please, Louise. So just a bit of background, first of all, to the business model and myself. I know we've got a lot of people on the webinar today, and a lot of those are unfamiliar with, obviously, myself and Chloe. A bit of background to myself. I've been with IP Global for 16 years now. I started off in Hong Kong, spent time in Singapore, and now I'm back working in the UK for IP Global. A little bit of context to the business. We have transacted over $3.5 billion of property investment since we set up. We are present in 15 international cities, investing in 18 countries across the globe. We have tremendous experience, given the fact that we have invested in many different markets, and we have consistently outperformed our projections year on year with very strong, well-researched projects, whereby we actually invest our own capital, and effectively we co-invest with our clients. And because we are investing money into these deals, there is a tremendous amount of research and due diligence we do, just as clients will for their own investment opportunities. So on to the next slide, please, Louise. Okay, so just at this point, I will hand the reins over to Chloe so that she can share some context to the German investment market. Chloe, thanks again for joining, and I'll just hand over to you for a while.
All right, thanks, Grant. Yeah, so as Grant said today, just going to give a brief overview of Germany and run through kind of the 6 top reasons why we feel that Germany is such a great investment opportunity. And as Grant alluded to earlier, particularly in the kind of current times we find ourselves in, where there are a lot of uncertainty, especially around things like interest rates and rising build costs and inflation. So yeah, just the 6 things. So the first thing is the no capital gains tax after 10 years. For various reasons and obvious reasons, this is a great benefit to any investor. The fact that you can kind of hang on to an asset for 10 years, and then when you sell it, you're exempt from that capital gains tax. And here with Germany, the kind of added benefit of that is that if you buy a new build or a refurb unit or an apartment, and as with many of the kind of investment opportunities that IP Global invest in, that 10-year period starts ticking as soon as you notarize on the units. So, you know, in 2 years' time, when it is completed, you've already eaten into the 2 years of that 10-year period. So you've only really got 8 years left, which is a great opportunity. The next thing is the pre-approved mortgages. Again, a phenomenal opportunity here is that a lot of other countries, where you are buying off plan, you would normally only start applying for your mortgages around about, I don't know, 6 months before it's completed. Where in Germany, before you really even commit to buying a property, you have that oversight of what your mortgage is going to look like, because you get that mortgage offer. And from there, you know, a lot of time can pass where between when you decide to buy it and when it's completed, things could change from a personal circumstance. You know, and also for some odd reason, the property might devalue. So where in Germany, you've really got that oversight and you kind of lock that lending in. So you have oversight of what your loan to value is going to be, and then also your interest rates, which means you can plan kind of your cash flows in the next couple of years. Which brings me to my next point, which is the fixed term interest rates. And I think, Grant, you'll maybe agree with me that Germany still provides very competitive interest rates, still below 4% for international investors. And I think at the moment we're looking at about a 3.85% fixed for 5 years. And then for 10 years, it's around about 3.91%, which is still very competitive. And once again, gives you that ability to plan and see exactly what your cash flows are going to look like. And I think this is one of the reasons that Germany's done so well over the last couple of years, when there kind of have been these fluctuations, is because when interest rates have gone up, individuals that have already got their mortgages in place aren't susceptible to those fluctuating interest rates, and they're already able to carry on kind of servicing that debt. And then lastly, or your next one is your stage payments. So in Germany as well, how it works is that when you've bought off plan or for a new build, you only pay for your property as soon as it meets these various construction milestones, which is usually a minimum of 7 milestones. And the developer legally isn't able to invoice or request that money until they've reached that milestone and to a certain standard. So your capital is protected. You're not, you know, giving anything out until you've actually reached that and can see your asset coming along and progressing. And it's also an additional incentive, obviously, to the builder or to the developer to make sure that he is building and building on time, so he can collect his profits as well. And the next one is your compensation for your delayed completion. Again, another huge benefit. I mean, in a time where there's a lot of uncertainty with rising build costs and maybe delays in receiving materials and construction materials, you know, if there are some delays, once again, you are compensated by the developer. And where you would maybe expect your rental income, you now have got a compensation, and usually it's worked out on a price per square meter. And, you know, depending where you buy, you might actually end up at a point where that is more than what you would get for rental. And once again, just another incentive for the builder to just make sure that they are building and kind of complete on time, so there isn't that additional outlay that you'd have to kind of pay you. So yeah, I mean, those are just at the moment the five, and we'll go into the next one. But Grant, do you have anything to add before we go on to the next section?
Yeah, no, I think, Chloe, the points you've made there are just so pivotal for the market, and they cannot be emphasized enough. I mean, the fact that no capital gains tax after 10 years, I mean, it's probably the only market in Europe where you have that benefit. That is such a strong benefit where people are so concerned about taxes these days. I think the points you make about, you know, the mortgaging is valid. I mean, the pre-approval process means that you don't necessarily have the stress of many markets where you are trying to arrange the mortgage closer to completion. You get that done right at the outset. Excellent fixed rates, as you say there, you know, 10-year fixed rates under 4%. So you can really plan your cash flow. And you know, really strong legal protection. I mean, the fact is you have that compensation environment if projects are delayed. I think that's why it's an incentive for developers to essentially complete on time, and that's what we typically see in Germany. So I think those are some really strong standout points as to, you know, why to consider Germany as a great market to invest in.
Okay, so then we'll go on to our last one, the sixth one. So it's just basically the strong, you know, economic story that Germany provides, and it is an incredible story. I mean, if you look at kind of Germany's history and, you know, all the economic downturn they've gone through and how resilient they really are, and how they've, you know, resurged as this really powerhouse globally. They are currently the 4th largest economy in the world. Their economy is around about $4.2 billion US. And that's all kind of really attracted a lot of people to the country. And we've had about 4.5 million people migrating to Germany, over the last 10 years. And it's quite a young population as well, just because of the opportunities that the country has to offer them. And at the moment, Germany has, around about a 47 million population in terms of its working force. Grant, I don't know, we had a discussion a bit earlier about this, about people coming over from Europe.
Yeah, I mean, I think, Chloe, to your points here, I mean, obviously Europe has a very open door policy. There's freedom of movement. People can get into Germany very easily. There's a lot of opportunities there. There's a lot of people who have been coming from Eastern Europe, given the war in the Ukraine, and they can easily accessibly get jobs in the major cities, and that's going to really strongly grow the population, and that's why we're going to see this population continually grow, and that's healthy for the economic environment of a country. So yeah, it's one of the key things, of course, that we look at, population growth, and that is certainly very, very healthy in Germany.
Yeah, and obviously this all kind of feeds into and impacts the housing market as well. And, over the last 10 years, we've seen on average, Germany's house prices have increased by a phenomenal 59% over quite a short period of time.
Yeah, and again, that's kind of strong and stable, which is what we like to see, Chloe. Would you agree?
Yep, I agree with that.
Yeah,
and it does definitely differ from city to city. And as Grant mentioned, the two cities we do invest in is Berlin and Leipzig. So I think if we go on to the next slide, we'll just talk about Berlin and why it's such a fantastic investment opportunity as well. Obviously the kind of capital city of Germany, and to me the history of Berlin and just how it's rebuilt itself is pretty phenomenal. And we kind of have this unique situation where there's this first-class city with an incredible global presence and strength. And yet, because of its history, the war, we've really got these pockets of value and investment opportunities that people can take advantage of. And, when the war came down in about 1989, there was this kind of movement from east to west for various reasons. Two of them being that, people that lived in the east were worried that it would once again come under communism rule. And the second thing is the west was seen to have a better lifestyle and more opportunities. So there was kind of this mass exodus from east to west. And it took a long time for the city to rebuild, essentially bring, a city back into one again. And it wasn't really until, the early 2000s that it really started to take off and all these kind of economic policies and strategies kind of kicked in. And if you have been to Berlin recently, it's very interesting to walk around. You walk around or you drive around and you see these really modern buildings, all these beautifully refurbed buildings. And then you can kind of turn the street or go, a little bit further down, and it's a completely different story. There are these really eyesore kind of communist buildings that for whatever reason haven't been refurbished or redone yet. And I think it's just very evident, it's physically evident when you go to the city and you see just, how much growth the city has done and how much has been rebuilt, but yet just how much more growth is still there. And it is very evident that there are very much investment opportunities to be made. And now Berlin really is kind of a center for commerce, innovation, and politics. And it's Germany's center for government, technology, education, and culture. And it is because they've really got this huge kind of focus on employment in these areas of knowledge-based and future-orientated industries. And they all kind of provide Berlin with a really solid base for this kind of long-term sustainable economic growth. And if we look on the next slide, you can just see really how Berlin's population really does stand out compared to any of the other kind of German cities. And as of 2022, Berlin's population was around about 3.7 million, making it, one of the most populous cities, not only in Germany, but within the EU as well. And it really kind of puts into perspective in terms of the opportunity that the city holds, and, what the talent pool is going to look like. It's diverse, it's large. When you do decide to sell that property as well, you've got just a whole multicultural of people living there, and it just really makes that net a lot wider. And this kind of, population growth is not expected to slow down anytime soon. By 2040, it's expected to reach around about 4.1 million people, and that'll be about 11% growth between now and then. And I think one of the reasons why kind of Berlin has been so popular is because of the opportunities that the city has to offer, and the type of people, the talent, and the companies. So if we go on to the next slide, it gives a great visual just to see, the economic growth of the city. It's grown around about 109% since 2000, and it totals about 179 billion euros to date. And, it's not finished growing. We still see there's going to be around about a 94% increase by 2040, and reaching around about 348 billion people. So, I think it's because people are really confident in the city. We've seen how, quite recession resistant Berlin has been compared to many other EU cities. For example, between 2005 and 2009, Berlin's economy almost doubled that of Germany. And then more recently with the COVID-19 pandemic, the city once again just showed how kind of recession resistant it is. And the economy grew by about 13% compared to other cities like Frankfurt, which was around about 10%. And then even London, that was around about 12.5%. And it's mainly because of kind of these knowledge-based and future-orientated sectors that they focus on. It's really kind of attributed to this robust service sector that they have to offer. And I think on the next slide, we can just see these are kind of the 5 main sectors that the economy is made up of. And they do range quite a bit. So you've got your energy and technologies, and some really notable employees here. We've got your Siemens, we've got your Tesla, we've got your transport and logistics, your BMW, your Volkswagen. We've got your healthcare, which is your Pfizer, your Bayer, the Thermo Fisher, employing over 400,000 people. And then you've got your kind of IT or your communications, which is your Microsoft, your IBM, your SAP. Again, over 100,000 people that are being employed. And then lastly, kind of your creative and media with your Netflix, your Paramount and Zalando. Again, over 300,000 people being employed here. So it's a diverse kind of economy, and with some really big, well-known companies that are there, and they believe in the city, they've invested in it. The ones that have been there for a long time or just keep investing in it, just because of that kind of vast talent pool that they're able to pull from. And obviously this kind of all impacts the housing market. So if we look at the next slide here, we can see Berlin's housing market that is severely undersupplied. And it's kind of this, sustained population growth together with this continued economic growth that remain the key drivers of Berlin's housing market. And quite frankly, the construction hasn't been able to keep up with this high demand over the last, 2 decades. On average, we're seeing about 12,800 units or apartments that are being built per year, but there are about 18,700 households that are needing accommodation. And you can see that there's just a substantial gap between demand and supply, and that's not really gonna become any smaller anytime soon. And by 2040, we could look at 87,000 plus in terms of that undersupply. And if we go on to the next slide. Grant, we had a discussion about this, and maybe you can just chat briefly about, a bit of the rental and capital growth that's happened.
Yeah, sure. I mean, I think, the points you've made just really sum up why Berlin is such a great city to invest in. I mean, but it's a very, very livable city as well. I mean, you've got a beautiful city, a very attractive city. And also you've got world-class infrastructure now, of course. I mean, you've got the new Brandenburg Airport. You've got Europa City, and there are some big corporates there. I mean, I think the KPMG office that I saw when I was there is way bigger than it is in Hong Kong or Singapore. And these are real, sort of iconic companies, but having a bigger presence in Berlin than, for example, Hong Kong or Singapore. So it's definitely a city that's going places. And the fact is, as you say, it's very much sort of tier 1 city, but with tier 2 pricing, and that's the exciting thing for investors, is that it's playing a lot of catch up from the unification challenges, which are now really much an opportunity for investors. And yeah, I mean, I think when we look at that earlier slide, Chloe, about the amount of supply, the fact is as we know, it's a very environmentally friendly city as well. I mean, the regulatory environment is stronger, so there's less actual planning applications being approved. It's tougher to get projects. Obviously, you know this better than me as the investment manager. It's your challenge day in, day out. So yeah, I mean, and this all sort of feeds into the fact of when we see this tremendous lack of stock coming to the market, and we see all this population movement because of all the industry that you mentioned in Berlin. We see these type of stats. We see extremely healthy capital appreciation. We see queues of people queuing up for rental property, which leads to an 8% rental growth. And then we see an incredibly low vacancy rate. I mean, being less than 1% is just phenomenal. So, if you're investing in this market, you can be extremely reassured that you will get a tenant, you will get rent, you will get the ability to pay down your mortgage month on month, and therefore you've got full confidence to invest in the market. Of course, we have our own lettings and management teams on the ground in Berlin and Leipzig, and therefore we have all of that infrastructure to help investors when they are seeking those tenants, which obviously we'll get very, very quickly. So shall we move on to the next slide, please, Louise?
Yep.
Okay, so this is me. So this is one of Chloe's projects. Fantastic project. I've actually been to this this location. It's in a place called Köpenick, which is, if you imagine, it's effectively equidistant between the new Brandenburg airport and Berlin. So we've seen prices go up in Berlin by quite a bit, and we're also looking at value spots. We are looking at where's the next place that people are moving to, wanting to buy, wanting to rent in. So in effect, we have a location here that is half the price of city centre Berlin, but it's basically a fantastic area. Köpenick has a wonderful high street, great amenities, really good sort of outdoor life. And economically, as I say, it's between those two hubs of Berlin city centre and also the new airport. And when I was there in November time, went through the new airport, there is so much business, economic activity attached to that new airport. So if you're living in somewhere like Köpenick, where we have the YVES Quarter project, you will be either working at the airport, for example, you will be working into the city centre, or you will be working at somewhere like the big Tesla gigafactory. There is just so much economic activity within a 30-40 minute radius here. So this is why we've invested here. We see this as a really strong investment opportunity. This project is a collection of 1 and 2 bedroom units. It completes in 2025. We can get 65% loan to value mortgaging, and those mortgage rates that Chloe mentioned, under 4% for 10-year fixed rate mortgages, 3.91%. But it's a really high quality developer. As I say, in Germany, you find that projects are built to a high standard, and Chloe's really sought out a very strong developer here who builds an extremely good product. And as you can see there, we have these beautiful landscape gardens and this very nice collection of low-rise apartments that I think we'd all agree would happily live in an area that offers so much for you to do in terms of socially and work life, and excellent pricing from 325,000 euros. I don't know if there's anything else you want to add on that, Chloe, or have I covered most of it?
Yeah, I think you've covered most of it. That was a good summary, Grant. Yeah.
Okay.
Yeah.
Thank you. Okay, so let's move on to the next slide, Louise, please.
Perfect. So here we come on to Leipzig, or what's maybe known as mini or little Berlin. It's southwest of Berlin, and it's only about an hour and 15 minutes on the train from Berlin to Leipzig's central station, which really is a beautiful station and not as small as you would think. It's quite a big station as well. And this is why it's become very popular, especially with a younger generation, because of that kind of short commuter time. You know, we've got people that can live in Leipzig and work in Leipzig, but then, you know, you can also have someone that lives in Leipzig and works in Berlin, and it's just that much more affordable than what you would find in Berlin. So, you know, we've seen a lot of growth since, I think, was it 4 years ago now, Grant, we first decided to invest in Leipzig. We've seen a lot of growth that's happening in a very short space of time.
That's right. Yes, it's been certainly a great market so far, with plenty of growth to come. And it's like Berlin. It's as you know, Chloe, having been there, it's a beautiful city. It's an attractive city. It's got an amazing station, and it's really got sort of world-class infrastructure there. And as you quite rightly say, it's commuter belt to Berlin. It's only an hour away, so effectively you could comfortably live here and commute into Berlin, or indeed you will be living and working here with all the various industries, obviously, that we'll cover as we go through this part of the presentation.
Yeah, and I think it's although we've already seen kind of a lot of growth as well, I think it's important to note that the prices in terms of property started at such a low low level, that the growth that we've seen hasn't finished growing as well. There's a lot of growth still available in the city, and we do think it's going to do very well over the next couple of years to come.
Yep.
Okay, shall we go on to the next slide? Okay, so here, as we see, similar to kind of Berlin, we see that the population really started to take off in 2000, and this is due to kind of various economic strategies and initiatives that the government did just to try and attract people into the city. They focused on transport and kind of connections. They focused on education and really trying to focus and bring the big companies to the city to attract people to it. And we've seen that the population has increased by about 26% since 2000, and there are roughly just over 600,000 people living in Leipzig. And it's actually going to be one of Germany's fastest growing cities, where it's going to increase by about 17%, and expected to just go over 700,000 by 2040. So once you can see, although the numbers might not be as big, and it's not a bigger city as a Berlin, it still has a huge amount of growth potential, and there's a lot happening in the city. And again, this is because of the opportunities that the smaller city does have to offer individuals. So if we look at the next slide, here's just a bit of a snapshot of the economy. We see that it's doubled over the last 2 decades, and it's almost going to double again until 2035. And we're looking at about 4.1 billion in terms of the economy by 2035. So again, a lot of growth that's happened, but still a lot of growth to come. And if we go on to the next slide, which you can see here, although there've been a lot of people coming to the city and a lot of businesses, it doesn't mean that the people aren't being employed. I mean, it's a phenomenal. You can see in 2005, the unemployment rate was really high. It was just under 21%. I mean, that's really high for any European city, any city in the world, really. And it's come down to 3.5%, and it's kind of expected to stay at that level and maybe even drop a little bit over the next couple of years. And that's because there've been so many jobs created and so many big name companies coming to the city. I mean, 67,000 new jobs created since 2000. I mean, that's phenomenal. And this all has an impact. And another kind of key metric we look at is your household disposable income, which really shows us that people are earning more, which means they're able to spend on more things like housing and rent, which is a great kind of economic initiative to look at when you're looking at your kind of housing and how that's going to improve over the next couple of years as well.
Yes.
And so on the next slide, Oh, go Grant.
Yeah, no, I think it's kind of a similar story in some ways to Berlin, as you mentioned under Berlin, in that after the Berlin Wall came down, lots of people headed from the east to the west, and I think in Leipzig as well, at the sort of turn of the 2000s, they launched a big sort of economic policy, a big drive to get people coming back to Leipzig, and obviously that took some time, but you can see you know, the fruit of those efforts now, in that those incredible reduction in unemployment numbers. I think actually the unemployment in Leipzig is lower than Berlin as well. And you know, how with all the investment going in there, we've seen that GDP per capita going up quite significantly. And you know, just anecdotally, it's interesting that, you know, Red Bull, when they were looking to invest in Germany, invest in the German football team, that they could kind of grow and grow the setup of a football club. They looked at many German cities, and they looked at Leipzig, and they invested in Leipzig, in Red Bull Leipzig, as it became known, because they saw the very strong demographics in that city, and the young population, and the opportunity, and they invested in the club, and that club has gone from sort of a fourth-tier German football team to the sort of Champions League, the top tournament qualification in Germany. And that's very symbolic, really, of how it's coming into such a fantastic city in Germany, and in fact the fastest growing city in Germany. So yeah, I just thought I'd share that as well, Chloe.
Yeah, that's great. Another great example. And if we go on to the next slide as well, we can see other examples of some other big companies that you all will be familiar with, and maybe even surprised to see that they've invested in a smaller city like Leipzig. It's what Leipzig does call these kind of lighthouse firms that have been attracted to the city since the early 2000s, and have really grown and invested so much more into their location. So, for example, there we've got Porsche, you know, not a small investment, 1.3 billion euros, and BMW, you know, over 3 billion euros, and employing over 4,500 people. And then you have your Amazon and DHL, which also have a huge presence in Leipzig. They actually operate out of Leipzig airport, and which is at the moment, it's very prevalent in Europe. It's the fourth largest freight hub in Europe. So you can see that, you know, the city's got a lot of connections to the rest of the world, and not just Berlin, but to the rest of Europe as well. So it really is going places, and there are so many more companies that are coming here and looking to set up here, and once again just attracting that talent pool of young people to the city. And if you go on to the next slide.
I think actually as well, I think Porsche and BMW are kind of on their third or fourth sort of increase in headcount in those in those locations they have in Leipzig, and that shows their long-term faith in the market. I think also you have the European Energy Exchange, I think, in Leipzig as well, which is another big employer. There's so many we could mention, of course, Chloe.
There are a whole host of them as well. It's really phenomenal to see the names that are there and what they're doing and how much they've grown in the last couple of years. And this obviously all, you know, once again impacts the housing market. If we go onto the next page here, we can once again see that there's an undersupply in Leipzig, and basically this all stems down to, you know, in 2000, I think it was, they, together with these other initiatives to attract people into the city, they decided to demolish the kind of dilapidated or communist style houses or buildings to make room for new development and bring more developers and people to the city. And actually they weren't really expecting this influx of people to come at such a quick pace, and they haven't been able to keep up with this demand. So once again, we kind of have this backlog and this undersupply that's been going on for so many years, and, you know, the construction hasn't been able to keep up with it. And we're looking to see that in, you know, maybe 2040, it's only going to get worse. And we're looking at around about 19,000 units of undersupply. And that really is looking, or depending on if the population doesn't really grow by much, which is really impossible and unlikely. So we're expecting to see an undersupply even worse than this. And particularly, you know, it's becoming less and less easy to find those spaces now to develop, particularly around kind of walking distance of the city center. And most of the new builds and refurbs are now being done further out from the city center as well. So, you know, Leipzig as a whole is appreciating in terms of property prices, but definitely there are pockets that are appreciating at a much faster rate, like those, you know, around the city center, in those kind of desirable locations, if you want to call it. And I think, Grant, you can maybe speak again on the next slide just around those those capital appreciations?
Yeah, I mean, so again, it's kind of similar to Berlin in many respects with the undersupply, and as I say, with the fact that Germany is very sort of focused on the environment, sustainable policies, and there's a much stronger regulatory environment for project build and getting projects signed off, which means it's super slow in terms of projects coming to market, which is really exacerbating that vacancy rate, which again is obviously slightly higher than Berlin, but incredibly low nevertheless. I mean, a 98% occupancy level is extremely high, and yeah, because of that sort of rapid population growth that we see, given the sort of 20-year planning since the early 2000s, the city's got very strong momentum. So we see very strong rental growth, very strong capital growth. I mean, I remember when I was in Leipzig and I spoke to, people involved in property, our rental team, and, they were saying that, people can easily get jobs in Leipzig or Berlin, given the new industry and all the various sectors that you mentioned, Chloe. But what they really struggle with is just trying to find rental property because of the lack of build and that undersupply that you shared on the earlier slide. So, but Leipzig is a really strong value spot. I mean, price is typically half of that of Berlin. But wage inflation is increasing. As I say, there's a lot of good employees, such as you mentioned there, BMW, Porsche, etc. Lots of highly paid jobs there, and then obviously you have the fact that it's commutable to Berlin, and that's why we're so excited about Leipzig and why we see really good growth opportunity for pricing over the next 5 to 10 years.
Perfect. I think just another thing to maybe add in terms of that rental growth, which is kind of adding to this, to the rental growth over the next couple of years, is that although there is this undersupply or lack of housing, we've recently had these interest hikes over the last 18 months. And the local market, or the locals, the Germans that are living there, who might have previously been able to afford to buy, when the interest rates were 1% or below 1%, are now having to pay 3.5 or 4%, and it's just not affordable anymore. And so they're having to turn to rent rather than buy, or buy into new build schemes. And likely the ones that can afford, they just can't reason that a couple of months ago they were paying maybe less than 1% to buy a property, and now they're having to pay 4%. So it's another kind of really current event that is happening that's just really fueling the rental market. And we think over the next couple of years, the rental growth is going to be more than 4.6, and especially in the different various areas, those closer to the city as well.
Yeah, and that gives investors a lot of confidence, because of course the one thing an investor's worried about is, will I get a tenant, and will I get a decent rent? And absolutely, to your points, you will get a very good rent and a tenant here, and then you've got the comfort of paying your mortgage down, etc. So all of this will feed into that confidence for investors that they will get not only tenants, but they will get good rents, and they'll get good rents for the long term.
Okay. Do you want to maybe go into the projects that we have there in the next couple of slides?
Yeah, let's go into the next slide, please, Louise, if we can. So, okay, so we're going to start with the Boulevard, and then we'll come on to the BOWEN. Actually, I've been to both of these projects when I was in Leipzig in November. I actually stopped for lunch just near to the Boulevard. It's a really nice location, just on the sort of northeast side of the city centre. I took a tram up there from the centre. The tram stop is actually very close to the building, so you've got excellent transportation links, and there's a nice little marketplace nearby. I mean, literally, you're sort of within the city centre within 10 minutes. So door to door, young professionals working in the city centre, where you've got that whole host of corporates. It really is a fantastic location with a really high quality developer. You can see some of the sort of internal specs there. Really good quality building. We've had a collection of 1 and 2 bedroom units from 217,000 euros. They're good sizes, good quality. This project will be built in 2025, and it's a series of staged payments. It's very good from a cash flow perspective. And the great thing with Germany as well is that 10-year capital gains tax period that Chloe mentioned actually starts from signing the sale and purchase agreement. So in effect, by the time you get to completion, you're already 2 years in. You've just got the 8 years to go thereafter. So yeah, really good project. I really liked it when I was there. I just think it's got all the functionality that you require of an investment property, great transport links, as I say, really good amenities nearby, and so close to that city centre. So I think it's going to ultimately long-term be great for owner-occupiers to buy from you as an investor. But if you're looking to hold this for 10 years, I think you'll make good capital appreciation, and as I say, you'll get strong rentability here. There's no doubt about it, given that it's a really first-class location. So let's go on to the next slide, if we can, Louise. Okay, so this is the Bowen. So this is on the east side of the city. I went to this project as well. It's a little bit further out, but it's just on the borders of the countryside almost, I have to say. I mean, it's I like this location too. You've got really good amenities. Literally, there's a bus stop just by the building. There's supermarket and doctors and other amenities nearby, the practicalities that people require. Again, it's a really nice small building of boutique apartments, slightly cheaper price points, so from 157,000 euros. And again, literally, when I left this site, I was into the city centre within 15 minutes. So, you know, door to door into the city centre within 15 minutes is extremely efficient travel time. This one completes this year. So for anyone who's looking for a quick completion, start to get to that yield, this is an ideal opportunity. I think the other point I would make is just as a general context across all the opportunities, if you hold Hong Kong dollars, US dollars, Singapore dollars, the euro started to get a little bit stronger now. So, you know, the euro is a good currency to get into right now for sure, because it's showing a lot of value, just like the GBP, but actually it's just starting to get a little bit stronger with those interest rate rises. So certainly a good currency to get into, where you should get some growth from a currency perspective alongside the capital appreciation side. So that's basically just sharing a few thoughts on our projects at the Bowen and the Boulevard. I don't know if you wanted to add anything to that, Chloe.
I don't have anything really to add, but there is a question regarding parking for these two projects and the one you mentioned in Berlin. So they don't, these developments don't have any parking, but, you know, as Grant has mentioned, they've got very easy access to get to any transport links into the city centre, wherever you want to go. You know, the Boulevard, the one before this Bowen, you know, you can walk to the train station, the LEIPZIG train station, within 15 minutes. You can walk into the city centre within 20 minutes. So they don't have parking, but we don't feel that's necessary for this kind of location that either of these investments or places hold. The Bowen, even though a little bit further out, it is only really a 20-minute journey to get into the city centre. You know, bus stop or train stop is right close to there as well.
Yeah, I agree. I mean, the fact is the transport's brilliant across all those three projects. So the necessity for car parking is just not there. I agree with you, Chloe. I think that was a good point to raise to cover that. So yeah, just really first class locations. And as you know, they take a long time to seek out these locations. I mean, if you look at obviously the amount of projects we've done versus the amount of projects you've had to look at, you know, that's a significant number. And these opportunities really are the sort of best of the best based on the amount of research, due diligence, time spent in terms of negotiating pricing and, you know, researching the developers, meeting the developers, etc. There's a lot of time and effort that goes into that before these projects can be brought to market.
Yeah.
Okay, so let's just move on, Louise, if we can, to the end of the presentation. So we've covered obviously the German investment opportunity. We've covered the markets of Berlin and Leipzig, and also the projects that we have available there. There's a number of questions that have come in, and we try to keep these webinars quite concise, quite sort of short, because we're conscious of people's times. And certainly the questions we've got, we will be answering obviously post the webinar, but there's just one or two that we will take for now. So one of the questions, I mean, we obviously covered the investment case for Eve's quarter, Chloe, but there's a question here, you know, just really, it was, you know, why Eve's quarter? Why did we choose that particular location amongst others that you would have looked at? So maybe if you just want to share your own sort of personal thoughts on that particular location and why you decided that that was the one to move forward with.
Yeah. So yeah, it's a good question. And I think, you know, we have been investing in Berlin for a number of years, and, you know, we've seen the price growth, especially, you know, towards the city center. So we're really now been looking for those, I guess, pockets of values you can find further out from Berlin. And Copenhagen's always really been an interest to us. And we've done an investment there before. It was called River Garden a number of years ago, and it sold really well. It's done really well. And our clients are very happy. It's rented really well as well. So it's always kind of been on our radar for something to look out for. And because of just the value that it does hold. I mean, you're looking in Copenhagen, you're looking around about an average of, you know, just over 7,000 per square meter, where you're looking at, you know, central Berlin, where you'd look at anything from 10,000, 12,000 to even 15 or 16,000 per square meter. So it really does hold a lot of value. We find it attracts just a whole host of people to the area. It's not limited to your more mature older couples that are maybe working for a long time and can afford it. It appeals to students because they're able to get to the universities in various places. It appeals to young families as well, just because there's so many parks, recreation areas, and also to so it's just the demographics, I guess, it appeals to is great. As Grant mentioned, very easy to get into Berlin city center as well. And actually the train and bus stop, that's really only, I don't know, Grant, you would have also done the walk 3 minutes, maybe 4 minutes from the site to that big train station there. They're doing an whole upgrade there as well, which is going to really dramatically reduce the times to, you know, just under 30 minutes to about 20 to 25 minutes. And we feel when that kind of kicks off as well, that's just going to bring more and more people to Copenhagen as well. I mean, if you haven't been there or you've seen pictures, it really is picturesque as well. Beautiful green parks, water, rivers, and everything, as well as kind of having those employment opportunities. So there's the Tesla Gigafactory, which is only really less than a 30-minute drive to there. Lots of shops and amenities and cafes. So yeah, it was exciting when we had the opportunity to look at the site, and then decided that it would be a really great investment with the prices we were able to get and sell as well.
Yeah, I mean, I think the point you made there, you know, with you've got the Tesla factory so close by, I mean, the fact is there's a lot of highly paid individuals there, and there's a big employment force. So it's not only people who will be commuting into Berlin, but there is a lot of major employers in this vicinity. I think there's also sort of science parks, and obviously, as we mentioned, the airport is continuing to grow with lots of affiliated businesses to that. So it's a really exciting sort of economic zone that it's in, but it's a great place to live as well. It's a really attractive area, as you say, and transport's A1. And yeah, very good developer. And as you shared at the outset, you know, you've got that great legal structure in Germany that gives people confidence to invest. I mean, you know, if you're looking to invest outside your home market, you want to get comfortable with tax and legals and mortgaging and rentals. And it's really hard, you know, from a high level just to argue against the German market because of those points. And then when you drill into specific locations like Eve's quarters, you really see, you know, such a fantastic investment opportunity. Yeah,
and I think, again, I mentioned, you know, Berlin has around about an 8.1% capital growth that's foreseen in the next couple of years, but there are these other kind of pockets that are just growing at a better rate or bigger rate. I mean, I think Copenhagen last year grew around about 14%, so it's almost double than, you know, general Berlin. So you can see how various areas are showing more potential growth than others, and Copenhagen is definitely one of them, and it hasn't stopped growing as well. There's a lot of development happening in this area as well, so we see that there's gonna be a lot of capital growth, you know, over the next 10 plus years. They have the space there as well for it to happen.
Yeah, and I think that, you know, we've obviously been investing in Germany for a time now, and we've always been looking at where's the next value spot, where is the next opportunity, and I think, you know, it's clearly that this is that opportunity for all the reasons that we've discussed, Chloe. Yeah. Okay, I'm just conscious of time. I think we'll take one other question, and we'll take one on Leipzig actually, just to balance it out. So
okay.
The one on Leipzig is do you feel Leipzig will deliver good growth over the next 5 to 10 years? So I'll just position that with yourself, Chloe, if you just want to share a couple of thoughts on Leipzig.
Yeah, I mean, I do really think Leipzig is going to grow, you know, over the next 5 to 10 years. As I mentioned before, I think it's just that combination of the population is growing so much, and it just continues to attract a lot of these big businesses to the city center. And I think those are kind of the key factors, as well as it being so close to Berlin. Berlin might be growing at a faster rate, but it just means that, you know, those individuals that maybe can't afford to live in Berlin will now be looking at a Leipzig, where you kind of, it's a much smaller city, but you still get that city feel. I'm always sort of surprised when I do go there, just how much there is to offer, and the great restaurants and cafes and shops and all of that are there. So I do think it's going to continue to grow and attract a young population to that. And it, I do think it's going to improve over the next couple of years. It definitely hasn't finished growing at all.
Yeah, no, I think it's exciting. I mean, as I say, those big corporates continue to increase headcount that are positioned there, and you know, with DHL, the big sort of cargo airport, with that great railway network that expands, you know, right the way across from Leipzig, Germany, and beyond. It's got amazing infrastructure, and it's definitely going to be a city where I think if we had this conversation in sort of 5 or 10 years' time, we would clearly have seen a tremendous amount of growth that's coming through. So yeah, I think that's that's definitely very, very strong on the economic side for Leipzig. So I think at this point we will draw the webinar to a close. As I say, we're coming up to not far off the hour mark. Chloe, I don't know if there's any sort of closing thoughts you wanted to offer. You've covered a tremendous amount of information there and really provided a great case for Germany, but I don't know if there was any sort of closing thoughts you wanted to add.
I mean, I think it's just kind of, you know, Germany now, and if you look at it as an investment opportunity, I think as we've mentioned before numerous times, I think now it is a really good time, because we just are in those times of uncertainty of rising interest rates and build costs and inflation. And I think Germany kind of has those things put in place that obviously can't negate them. You can't get away from that risk, but it definitely helps you kind of minimize and really navigate, you know, what your investment will do and how you can manage things over the next, 5 to 10 years, or however long you decide to invest or hang on to the investment. And then after that, when you decide to sell it, there's that kind of additional benefit of that no capital gain. So it does kind of provide those additional elements of surety that you might not get with other markets you would look to invest in.
I think that's a very good point. I think in uncertain times it provides great long-term stability and great opportunity. So I think it's a perfect market for where we are in the world right now. So yeah, good. That's a very good point you've made there. So we'll bring the webinar to a close now. I do hope that everyone who has tuned in has found this insightful, informative, and has got a lot out of it, and has really understood from Chloe the excellent opportunities presented in Germany, amongst the cities of Berlin and Leipzig, and also those key reasons why we invest there from a property perspective. So all that remains for me to say is thank you very much indeed for joining. If you do have further questions, do feel free to keep them coming in. We will reply to the questions you've sent in, of course, at the earliest opportunity. The YVES Quarter project is now launched and it's already been very well received in the market. So if you require further information on it or the other opportunities in Leipzig, as I say, it'd be a pleasure to assist there. But all that remains for me to say is, Chloe, thank you very much indeed for sharing your time on the webinar today. It's been brilliant to have you on the webinar with me, and wish you a good weekend and everyone else, and look forward to seeing you all soon. Thank you very much indeed. Bye-bye.
Thanks, Grant. Bye-bye.